Hey guys, it's the Simple Investor here. Today we're going to be taking a look at Celsius Energy Drink, um, who reported very strong earnings today. Not sure if you've heard of this stock. They're kind of an up and coming stock, but they have really, really impressive growth, and they actually reported very strong earnings today that actually disappointed the market to the latter half of the day, even though the market ended strong today. But their earnings went extremely well. But let's get right to it. So today, they reported earnings of revenue growth of 23%, $402 million dollars. And then at quarter two of last year, they were at 325 million. North America growth was at 23%. Most impressively, international growth was at 30%. And then their margin here, gross margin is growing here at 320 basis points. And the net income here growing very nicely here at 55%. So they're able to take home more profit, which is really nice to see. And then their EBITDA here as well. So earnings before interest, taxation, depreciation, and amortization was up 29%. The one thing about them as well is their earnings per share. That beat analyst expectations by 22%. And then, like we were saying here, international sales were up 30% year over year. So again, this was a really impressive quarter for this company. They're growing at a really nice rate here. And then if we want to actualize this year over year as well, so revenue growth and EBIT per quarter, you can see here they're growing quite nicely here with revenue growth year over year, actually getting close to what they were here in quarter three 2023. They're matching that up quite nicely, but again, comparing it to exactly that quarter, quarter two 2023 versus quarter two 2024, they're up over that quite nicely. And then kind of also for them, I like to look at a company's debt to equity ratio. I like to see kind of where their balance sheet is sitting because it's really important for these young companies that they need to have ample cash for reinvesting into research and development and to new endeavors to really expand kind of their revenue catalysts and growth catalysts as well. So have a company like this, you want to see that they have some cash reserves for expanding and for growing. So taking a look at that, they're actually in a really good debt to equity ratio. They have virtually no debt and they have some equity there. So the ratio actually sits at zero. So that's what you want to see for these companies, especially for a company like Celsius, who's still really young and is growing and hasn't really been able to compete with Monster, which would be the energy drink kind of behemoth that they'd be competing against. They are still quite, their revenue is not even close to what Monster is. But if they want to get to where Monster is, you want to see this revenue growth. You want to see this debt to equity ratio to stay low so that they can invest in those. And then turning over to valuation, their valuation is actually quite nice today as well. They're sitting at a 44 PE ratio, which it's actually come down quite nicely here. As you can see, it was absurdly overvalued quite a few years ago here, but today it's sitting at one of its historic lows. So again, that's what you want to see if you're an investor. You want to buy these companies that are up and coming at a fair valuation, but you also want to recognize they have some extremely high potential for growth. But as well, with this company, they are partly owned by Pepsi. Pepsi has a stake in them. So that's what you want to see too, is that they have some mature guidance into kind of, and they're not actually competing against Pepsi, which is nice to see, because Pepsi obviously has a very large control over the food market. And so Celsius being partly controlled by Pepsi allows Pepsi to kind of issue some guidance for them and help them kind of navigate and help them with their marketing. So that's what you want to see kind of from an investing standpoint, is that they have some guidance and they're not just a brand new company with no experience in the energy drink market. And then as well, Celsius is looking to expand. They just recently expanded into Canada, the United Kingdom, and Ireland. So they really haven't even, that's why their international growth was at 30%, is that they're just starting their growth right now. So like down the road, if they're only in three countries right now, and I believe they're looking to get into France as well. But them being in the United States, Canada, UK, and Ireland, really they haven't really actualized on a lot of potential growth if those are the only countries that they're in right now. So that is also something really promising And that really makes you wonder how much of Monster's revenue can they start to eat into as they start to expand into these markets. It's going to be quite something to see if they can really take out Monster, because Monster has actually outperformed the S&P 500 over the last 5 years as well. They've had some really profound growth. I actually think that they have surpassed even some tech companies in terms of growth over the last 5 years. So it'll be interesting to see where Celsius goes and if they can start to kind of creep into Monster's market share a little bit. But they are the earnings today were very impressive. Like here, you can even see again here where everything was up today. The revenue 23%, North America 23%, like we were going over. But it was just a super solid earnings. I was a little shocked that they started to go. The market kind of didn't like them as the day went on, even though that they reported earnings before open today, and they opened at a spike. But time will tell for this company. I really think that they have a strong kind of foundation to go from here. And then kind of what I like to do is compare them to the S&P 500 over the last 5 years, because again, you're always better to buy the S&P 500 if these companies can't actually match the growth of the S&P 500, which it's actually this stock Celsius makes the S&P 500 look terrible. You've got 2,592 growth versus almost 80% growth in the S&P 500. So that's something to keep in mind as well, is that you are seeing growth that has exceeded the S&P 500 in the last 5 years. Now, keep in mind that past performance isn't indicative of future performance. So do keep that in mind. But I'd love to know what you guys think of Celsius. Is it a company that you see as a buy, a company you see as a hold, or a company you see as a sell? Let me know in that comment section below. Be sure to like, subscribe, and we'll see you next time.